Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC-TV18 Moti Rosewal studios. All of us in festive attire. It's a beautiful looking set as I'm seeing it for the first time. And right at the outset, let me wish all of you, your families, a very, very happy Dhanteras. And of course, leading up into Diwali, wealth, prosperity, and of course, most importantly, health to all of you who are with us. With me, my colleagues Rima and Nigel. Guys, hi, morning.
Hi, morning.
Hi, good morning. You know that song, it's beginning to feel a lot like Christmas? I think we need a Diwali version. Just going by this beautiful set, the price action yesterday, and you know, everyone's dressed up in office. Well, you can feel the festivities.
Well, that's right. Wealth, wisdom, and well-being, right? I mean, that's what you're looking forward to. And hopefully, we're bracing ourselves for a good festive season because the run-up actually was a little bit gloomy. And now it seems to be picking pace as well. But not a bad idea, Rima. I think someone should do that.
Actually, just think about it, guys. I mean, on the eve of Dhanteras, we got a almost 3.5–4% move on gold last night, right?
Ooh.
I mean, it's getting a little...
we said that even last week. We said that the week before.
But it's 4% in one day?
Yeah.
I mean,
that's a bit much.
That's big. And at this level.
At this level.
So anyway, let's just take it from the top.
Checking Dhanteras to Dhanteras, right? So last Dhanteras, gold was at about 77,000.
Yeah.
And now we're what, 129, 1,29,000 for 10 grams? I mean, that's the extent of the rally from in 1 year.
Absolutely. Let's just take it from the top then in terms of where we are at, right? And I want to just start with, of course, a little bit about Russia and Ukraine. So President Trump spoke with President Putin. We know this because President Trump put out a sort of truth on Truth Social, and he essentially said that he's spoken with President Trump. And about a variety of issues and, of course, trying to end the war between Russia and Ukraine. He said President Zelensky of Ukraine is going to be at the White House tomorrow and he's going to sort of talk to him about how his phone call with President Putin went. And then Trump said that he's going to meet Putin in Budapest at some point, location undisclosed, but that's going to happen as well. Now, yesterday evening, we had a clarification. Remember, when we came in yesterday morning, actually day before yesterday morning, there was that excitement that President Trump essentially had said that he's spoken, or actually this was yesterday morning, that he had spoken with, India, and that India promised that they're going to reduce the purchase of Russian oil and they're going to buy more US oil. Yesterday evening, the MEA essentially said, our MEA, the Ministry of External Affairs, said that they are not aware of any call that happened between both the leaders, which is President Trump and Prime Minister Modi. But they did not sort of confirm or deny what they're going to do about the oil. So I just want to make that very, very clear in that sense. And I think it's an important point. You add to that what we are waking up to with this morning, which is President Trump saying, well, he's going to make a fresh attempt at peace between Russia and Ukraine. And I think it still remains constructive in that sense. Now, what is not constructive is everything else. So look at US equities last night, down S&P down 0.6%, NASDAQ down about 0.5%. And out of the blue, you've got the regional banking sector in the US taking a big dive. So the KRW, Regional Banking Index, fell 6%, over 6% actually. And why? Because two regional banks essentially said that they were hit by frauds. Without going into details, and we perhaps can later, but it basically sparked off broader credit concerns across that small banking, regional banking sector. It's not new. We've seen this earlier as well. It's new this time in that sense. Gold prices, as we were just discussing, 3% plus, actually 3.5% last night. Just an incredible move on gold coming through. The 10-year lost 6 basis points, under 4%. Oil was down. It was basically everything risk off. Data to boot was weaker as well. So you had the Philly Fed, which came in at the lowest since 2021. You also had the New York Fed services data, which was weaker than expected. And of course, there's no end in sight to this U.S. shutdown. Treasury Secretary Bessent saying that the cost of the U.S. economy could be up to about $15 billion per day. And markets, in response to all of this, if you look at what Fed pricing is, they're pricing 225 basis point cuts by the end of the year. So That's the picture. I mean, I started with something slightly maybe at the margin, a silver lining positive, which is Russia, Ukraine, President Trump trying again. But everything else which rolls after that, which is market action, the regional bank stuff, and of course, the data, I mean, it's not looking all that great. Now, just to come back to where we are at, and we are in a very, very good place with the rally that we've had. Yesterday, we saw a powerful follow-on rally, and we've actually taken out many important resistances on the upside. The next stop, it's an equality level, is 25,705 for the Nifty. The support comes in. It's moved up. I mean, the big one is 25,008 as we've been putting out. But now you've got to look at trail this actually. With the 40 hourly exponential moving average is 25,300 or so, 291 to be precise. Nifty Bank, by the way, is almost back at all-time highs, right? I mean, that is 57,628. So I'm not going to put out upside levels beyond this now. Let's see. Support is again the 40 hourly exponential moving average, which has been dragged up along with the index, which stands at about 56,692 or so. So, I mean, pretty good place, pretty good position. You've got this sort of, another push for peace by President Trump. There's this meeting tomorrow. So maybe when we come back on Monday, perhaps there will be headlines, etc. We don't know. We just sort of go into this weekend with all of this stuff. GIFT Nifty will come up. It'll give you a quick sense of how we're likely to start. We'll pick it up from there. 50 points lower, 25,600 or so is the implied open. The F&O positioning, the F&O data, Nigel has walked across with exactly that. Nigel, over to you.
Well, the festive season is definitely here, as the Nifty yesterday closed at a multi-month highs, and things have been looking good. But I'll tell you what, we talk about shorts being in the system and why that's a blessing in disguise. Well, the perfect example has been this series itself, because from the start of the series till now, we're up close to around 1,000 points, and the FIs that were aggressively net short at around 94%, well, they have covered their shorts to around 86% or thereabouts. So the power of short covering has been on display. Well, let's tell you about the FI data first up. Now they're showing us some money. They were underweight the Indian markets. If you compare it with, India's weightage in the MSCI Emerging Market Index, FI weightage actually is much lower out there. And now it seems the hope is gradually that money can gradually come back. And that's why we saw in the cash market, they bought close to around 1,000 crores. And in the F&O market, just take a look at index futures. The covering was to the extent of close to around 26,000 contracts, because they added 12,000 long contracts and they covered close to around 13,000 short contracts. So that's the kind of short covering bounce that we saw in yesterday's trading session. Keep in mind that they are still net short, 1.63 lakh contracts on the short side, as well as, in terms of positioning, close to 86% of their positions continue to be on the short side. But we keep focusing on the FIs. Well, let's focus on the other big participant, the clients. They have got this spot on. Remember, they have been building their long positions. It went to around 1.35 lakh contracts, and gradually, as the markets have bounced, they have unbound some of those long positions, so they continue to remain net long on the index. On the options side, the FIs wrote more puts then calls in yesterday's trading session. And because of the aggressive put writing, now the PCR has moved back towards the higher end of the range. Higher end of the range is around 1.65 or thereabouts. In yesterday's trading session, the PCR went to that range of around 1.4 odd. And two strikes were active. 25,500 put, extremely active in trade yesterday. 25,600 put as well, fairly active in trade yesterday. So let's get the levels up for you on the screen. The near-term support, going by the options data, is around this 25,400 odd mark. And yesterday you had a perfect trend there. That's the market ended at the high point of the day. The key support, though, comes in at around 25,000 odd, because that's the level closer around the 20-day MA. So till that level holds out, you'll be fancying your chances. The market wants to move towards this all-time high of around 26,300 or thereabouts. So the journey has started. If you're an adventurous trader, then you'll say, let's trail our stop loss, at around 25,000 and play for a higher upside. Otherwise, some part of your portfolio could be take some money off the table on the index itself, because you've already had a good run. The Nifty Bank's in focus. Support is the recent resistance, which is around that 56,800 odd, and we're just 250 points away from the fresh all-time highs, which could very, very well be here today itself. But it's going to be a very, very big earnings day, because from the Nifty itself, more than 35% of the index will be reacting to numbers. Infosys and Wipro, the stocks are expected to open up in the red. I will be interested to see what happens from there, whether the street wants to look ahead. The other couple of names later today that will be reporting their numbers. Reliance Industries, for me, that's the joker in the pack. That's what could take the Nifty closer to around that fresh all-time highs. And finally, over the weekend, banking stocks will be in focus. A lot of those big banks will be delivering numbers, and big boy Ultratech Cement as well. So the trend seems to be up. but maybe some kind of taking some money off the table in the near term may not be such a bad idea.
9 banks report numbers on Saturday, and the big ones, of course, are HDFC Bank and ICICI Bank. Let's get in some equity market opinion now. Mahesh Nandarkar of Jefferies says that within the consumption theme, it's the premiumization trend that offers higher long-term growth visibility, as evident over the last decade. He says it's not just across goods, but also services. And the simultaneous GST and income tax cuts are the triggers for FY26. The Pay Commission can further provide impetus over FY27, FY28. Their preferred premiumization plays are Eicher Motors, Interglobe, GMR, Amber Enterprises, Lodha, Radico Khaitan, and M&M. All right, let's get back to the U.S. markets and a global picture. Richard Yetsenga, the Group Chief Economist at ANZ Research, is now joining in on the show. Richard, thank you very much for that season's greeting from everyone here in everyone here in India. We're celebrating Diwali, so thank you very much for joining in. Lots happening, right, on the U.S. economy front. Rate cut expectations, the U.S. 10-year yield slipping below the 4% mark for the first time in April. The labor data has been weak. Gold has been on a tear. Tell us how you're seeing the markets now.
Well, I mean, in all of that mix, the good news is the data has been broadly fine. I mean, obviously, we didn't have the last payrolls number, but in aggregate, roughly as many misses, there have been kind of hits the other way. And so even though there's a lot of noise and a lot of things we need to keep track of, the economy seems to be pretty constant. I mean, in some ways, that's disappointing some of the previous expectations for a lot of Fed rate cuts. But it certainly makes me take things in my stride when markets move around a lot like they are, and we've got headlines about potential cockroaches and other sorts of infestations. If I go back to basics, the US looks like it's still handling what's going on in reasonably good shape.
So those cockroaches that you're talking about, you're referring to the regional banks and the slide that we had? Because it just seemed, if it is linked to that, there were only 2 cases. What got reported overnight, and it seemed a little more idiosyncratic, linked to those banks, specific borrowers, rather than a broader systemic issue with regional banks.
Look, I'm probably referring to the comment that where you find 1 or 2 cockroaches, there's normally a few more hiding, if not in plain sight, at least where people should have seen them. So, look, after the run we've had in credit, generally globally, given the narrow level of credit spreads, I don't think anyone should be surprised by some idiosyncratic problems. The real macro question is, and obviously those idiosyncratic problems matter if you're directly exposed, but the real macro question is, is there the tinder there for those idiosyncratic problems to start a brush fire that becomes a much bigger issue? And on that point, I'm still reasonably sanguine. I think in general balance sheets, private sector balance sheets at least, are in good enough shape actually that what we're seeing is likely to remain idiosyncratic and contained, rather than become general.
The cockroaches is the Jamie Dimon comment. When he
Correct.
said that you can see 1, 2, but when you see 1, 2, there are probably more, and that's the time when your antennas need to go up.
All right. Hi, Richard. Good to speak to you. I recall, Richard, our last chat, right, when you were telling us that ratings, well, it's good, but you'll be looking at some kind of reform measures that need to come about for the Indian economy. And we've got a couple of them, right? We have got some kind of action on the monetary front. We've got GST 2.0, that is a bit of a rejig in terms of our taxation policy here. And the hope is that the second half of this fiscal, the Indian economy actually does find its footing, and from there on, just look upward. Your reading of the Indian economy, as well as our markets, the FIs, they've deserted us for the last year or year and a half or thereabouts, but there are mild signs they're actually coming back. So your comment on both.
Yeah, some good points there. And certainly when you look at what India has done on GST reform, India might be the leading economy in tax reform at the moment, certainly of the economies I follow. If you think about where there are kind of structural fiscal problems, and in the advanced world, the UK, France, Japan, the US, India is way ahead, even in terms of advanced economies that don't have such pressing fiscal issues, but where there's a future problem really emerging in the tax system, and Australia is a good example of that. India is doing a lot more on tax reform than those economies, so definitely a big tick for the Indian story there. I think the other thing in favour of some kind of cyclical outperformance from India is the fact that there has been some credit tightness in the market, driven at least partly through some kind of some regulatory efforts to slow lending in some of the consumer sectors. I mean, they obviously impact the economy through the credit mechanism, but then those effects pass, and the things like the positive signals from the equity market, I think, are going to have more fertile ground to feed into. So, look, 2026 feels like a better year for the Indian economy than parts of 2025.
Richard, morning. Just a brief last question. Gold, this unstoppable rally, 4% in one day, 10% in a week. I mean, there's, of course, there's chase which is on. But is it showing, should we read something deeper into it and connect it to, bad stuff, or not necessarily?
Look, bad stuff is probably quite a good description because it's hard to define. I don't know anyone that's got a good valuation metric for gold that pinpoints, even within a reasonable order of magnitude, why the price is where it is. And if it was $2,500 an ounce a year ago and it's over $4,000 an ounce now, and of course the daily momentum indicators still look very, very strong, who's to say what the right price is? We've already, actually, Jamie Dimon's name's come up once in this conversation. I mean, the view he expressed on gold was, and I'm summarising, look, for a long time, it's hard to find a reason not to own gold. There seem to be a lot of potential pockets of problem in the global economy, and so it does recommend itself as an asset class. But he said, I wouldn't own it because the transaction costs are too high, they're 4%. I mean, maybe the upshot of that is buy some gold jewelry and wear it and use it and enjoy it and convince yourself it's an investment, because I do agree that gold is telling us something. And what's most likely is it's not telling us about France or the UK or Japan, all of which have pressing fiscal issues, because the historical flight from those kind of problems would usually be the US dollar, but the dollar's down. So I think it's telling us about the dollar.
I don't know, Richard, you've ever interacted with Willem Buter. He was this chief market economist at Citi. He wrote an article in the FT essentially urging central banks to sell their gold. I mean, not all of it, but basically his point was that, it's just too much concentration. But as he says, he calls gold a 6,000-year-old bubble. So he's been wrong for a long time. He accepts it. It's interesting.
Well, 6,000 years is a long time to be wrong. You might want to reevaluate your investment thesis, I would suspect.
Yeah, I told him that. And that interview will air later. But anyway, it was an interesting sort of, other side of the view. We'll air that interview later. Thanks very much for joining us, Richard. Really appreciate your time and good speaking with you. We'll take a quick commercial break here. Lots coming up, lots of stock-specific action that we need to get by, lots of earnings as well. Top 10 segment up next. So LTI, Mindtree, Cyan, Vikram Solar, Vari Energy, Suntec Realty, Kalpataru, Metro Brands are stocks on the back of positive news flow. Wipro, Infosys, JSW Infra are stocks on the radar that are likely to open in the red, but likely is the key word. We'll take a break. We're back with our research team.
Welcome back. Our entire research team is now standing by with CNBC-TV18's list of top stocks for the day. And let me take it, guys, because I've got Infosys and Wipro to talk about this morning, both reacting to their earnings. Now, to begin with, Infi's ADR was down 2.5%, 2.2% to be precise. So that gives you an indication of the overall market rate. Now, the question is, why perhaps are the investors disappointed? That is because the upper end of the guidance on revenue is not changed. The earlier guidance was 1 to 3%. The company changed it to 2 to 3%. So the lower end of the revenue guidance increased from 1 to 2%. But the upper end of the guidance remains unchanged. And the question is that after a strong H1, where in Q1 you did 2.6%, you did 2.2% in Q2, why do you not have the confidence to raise the upper end of the guidance? And also, if you just do the math behind it, if the company has to do a 3% revenue growth for the full year, upper end of the guidance, it basically means no growth in Q3 and Q4. Yes, there are seasonal follows which happen in the December quarter, but I think the street is a bit disappointed. The question is the management being conservative, or is there something in the macro environment? Per se, Q2 was fine. Revenues ahead of expectations at 2.2%, while margin performance slightly short of street expectations at 21%, lower than consensus, but it is still an expansion of about 20 basis points. The other one is Wipro. And here again, the ADR sold off yesterday, down close to about 2.5%. Now, Q2 was in line with estimates, but the encouraging bit is that the Q3 guidance implies an improvement versus the current quarter. Q3 revenue guidance for Wipro stands at minus 0.5 to plus 1.5%. At the midpoint, the company is guiding for 0.5% growth, which is better than the 0.3% growth that they did in Q2. Q2 was largely okay. Revenue growth of about 0.3%. EBIT margins got impacted on account of a client bankruptcy, so they came in at 16.7%. If you strip that out, adjusted margins are similar to the prior quarter. But I think the takeaway is that both, just by the price action, then while numbers are better than muted expectation, it's still an industry which is not growing, right? Yeah. For Infy, it's still a 3% revenue growth. So, give or take a minor 10, 20 basis points beat here or there, it doesn't change the overall picture. The growth is absent, and there is nothing in the commentary which suggests that growth is coming back.
Okay, all right, Rima, thanks for explaining that to us. In fact, we'll connect with the top management of Wipro at around 8:30 a.m., just in just a few minutes from here on. Well, let's turn our attention away from tech. Vivek joins us to tell us about JSW Infra. Hey, Vivek, good morning.
Well, good morning. JSW Infra, slightly soft quarter, in the context of how the company has grown so far. Revenue is higher by 26.5% on a year-on-year basis. Number one, aided by the logistics segment that's done quite well. However, when you're talking about the port segment, volumes higher by just around 3%. So that is coming slightly muted. EBITDA higher by 17.1%. The EBITDA margin, however, on a year-on-year basis has softened on the back of the fact that the Navkar acquisition is at a slightly lower EBITDA margin base. So 48.2% versus 52% on a year-on-year basis. Profitability largely unchanged, largely flat on a year-on-year basis. So the cargo handle volume this time around just up around 3%. Segmental revenue, now look at that, because port operations up 10%, logistics revenues is what has actually gone ahead and aided the top line growth. Now, key takeaway as far as the management commentary in the con call was concerned, at the end of Q1, they were hopeful of a 10% volume growth guidance. This time around, they appear to have softened the aspirations. It's now at 8 to 10%. What aided the performance? Strong performance at the Southwest Port, Jaigarh Port and Dharamtar Port. However, weak iron ore volumes at Paradeep is something that went ahead and offset the strong performance at other ports.
All right, JSW Infra in focus there. Now let's focus on LTI-Mindtree and Cyient, and we are back to the lady in the middle here. Back to you.
Well, yeah. So LTI is actually a pretty good showing this time. The company's delivered a revenue growth of 2.4%. Constant currency margins have come in ahead of expectations, expanding by 160 basis points. HSBC says the company offers strong growth, pick up at reasonable valuations. They have a buy call, while Nomura has a neutral call, but they too have raised the EPS estimate. So all in all, LTI-Mindtree is a good performance, a beat on revenue and margins. Talking about Cyient, now here we're looking at the DET, the digital engineering business, which is majority of the company's growth. And after struggling for a long time, this time you are seeing signs of a recovery. So Cyient's top line growth has gone up by 0.5%, and EBIT margins too have improved by 20 basis points. And the company in the conference call also spoke about scaling up the semiconductor subsidiary. They gave a lot of numbers, which we could get to in a bit, but overall not a bad showing from Cyient.
Okay, all right, Rima, got that. Going back to Vivek, Waaree Energies as well as Vikram Solar, good numbers?
Well, that's right. So solar module manufacturers are expected to be very, very strong set of numbers. They haven't disappointed at all. First, let's start with Vikram Solar. The company just delivered its Q1 results a few days back. Q2 is out on a year-on-year basis, extremely strong. On a sequential basis, on account of monsoon, there appears to be some softness. But looking at the numbers on a year-on-year basis, the revenue is almost doubling. EBITDA up 3.2 times on a year-on-year basis. EBITDA margins too almost doubling, actually 21.6% versus 12.6%. Profitability higher by 17.5 times, aided by some one-off factors as well. Order book quite steady, over 11 gigawatts. Module sales this time around at 784 megawatt, which is 271 megawatt on a year-on-year basis. Now, coming to RE Energy, again, against the limited street estimates that we have, it's a beat that the company has delivered. Revenues higher by close to 70%. EBITDA, again, more than doubling, almost 2.7 times higher. EBITDA margins at 23% versus 14.7%, and profitability too more than doubling. The important point as far as the company's takeaway is concerned, EBITDA margin guidance, EBITDA guidance is at 5,500 to 6,000 crore. That is something that they've maintained. Order book of 24 gigawatt valued at close to 47,000 crore.
Okay, all right. Thanks for that, Vivek. And going across to Sonal, who's here to tell us a couple of real estate names. Sonal, first of all, happy Dhanteras to you, and a special one for you. You got little Vani at home, and don't miss out on the opportunity. Go and pick up some gold for Altel Mangalam as well later. But tell us about the companies you're tracking.
Thank you so much for that. Well, I'll do the gold buying myself. But Nigel, talking about real estate companies, let's start with Sunteck Realty. It was their Q2 results. A good update that came by. Pre-sales up 34%, collections up 24%. The net operating cash flow is up 35%. So balance sheet also has improved. The other one is Kalpataru, which is a recent listing. There they gave Q2 business update. On the residential part, it's a good update. They've seen pre-sales growth of 19%, collections up 37%. So good update coming in from both these companies.
Okay, all right, Sonal. Thanks a lot for that. And let's wind this down with Mangalam then. Mangalam, you know what you have to do, but tell us about Metro Brands.
I bought Zomato gold yesterday, Nigel, if that counts as gold. But, let's talk about Metro Brands. Good performance coming in, 11% revenue growth. The EBITDA grew by about 22%. There was a marginal expansion in the margins as well. The net profit was slightly muted, but that was because of higher depreciation because the company opened 42 stores. The second quarter is a transitory quarter, was impacted by rains and the GST transition. The festive season, extremely crucial. So expect some green on the stock and more thereafter, largely on account of expectations of a better performance in the second half.
Okay, all right, Mangalam, thanks very much for that. Now, Wipro posted an inline second quarter earnings, beating expectations. Dollar revenue has risen about 0.7% on a quarter-on-quarter basis. The management has also raised their guidance for the third quarter. Rima caught up with the management and began by asking them about their third quarter guidance. So this is the Wipro top management in conversation post the numbers which were put out. So not just the numbers for the quarter, but the guidance and the outlook as well. Listen in.
If you look at the previous quarter, we talked about three of the SMUs showing revenue growth sequentially. And we also had Capco growing sequentially as well as year-on-year. Second, we had a very strong bookings, 4.7 billion, where we have won 2 mega deals as part of that, which are of course renewal, but helps us to grow with the client in different areas. For the first half of the year, we have almost done $9.5 billion in booking, which is totally four mega deals. And of course, rest are all large deals and smaller deals included. So the momentum that we have in bookings, some of it will convert that into quarter three and into quarter four. And our guidance bakes in the bookings that we have made in quarter one and quarter two, and some of the what I would call as the transition and steady state that would happen in quarter three for us with those clients in those programs.
Has the demand environment changed, Srini?
Not significantly, Rima. I think if I look at our pipeline, I can reflect that way. In spite of that $9.5 billion booking in first half, we still have a very robust pipeline across the 4 strategic market units and of course across the industries. But it varies from industry to industry. But the broader theme of the pipeline that I would say is the vendor consolidation and also of course cost optimization as part of that. Second, we also see infusion of AI into some of this run and operate for our clients, which help them be more productive and bring in efficiency and velocity. And the last part, which is very important, is the new piece of business that we get purely from AI, whether it's AI advisory or helping the clients with the data architecture or managing the models for them or run and operating their models and so on and so forth. So that's a kind of deal pipeline that we see in this quarter, Rima.
Aparna, when we last spoke to you, you said all these large deal wins will have a cost associated with it, and therefore margins will come under pressure. Can you explain what happened at the EBIT line for you? There's that one-time client bankruptcy impact, there's rupee depreciation plus the cost. Can you break it up for us? And what can you guide going ahead?
So the insolvency impact that we took in our financials is 50 basis points. Adjusted for that, our operating margins that we reported was 17.2%. This had two parts. One is certainly, we did have rupee depreciation and the dollar weakness even versus the crosses help us. That came in as a positive. Our utilization has improved. The profitability in our fixed price programs has also aided. So both operational and forex have been an upside. And obviously some of the investments that I've spoken to you about in terms of some of the large deals that we've managed to secure, they were almost completely offset. We were in a very narrow band. Q1 we reported 17.3% and it's 17.2% for Q2.
And going ahead, Aparna, for Q3, Q4, does it stay in the 17.5% band? Or do you think in the absence of any forex tailwind, the upfront costs associated with the large deals will put pressure on the margins, like you told us last time?
Yeah, I don't think we're really, the forex, we are not in a position to project. Obviously, the rupee has been quite volatile. We'll have to monitor that closely. We have a good foreign exchange risk management policy that governs it. We're quite confident we'll be able to manage the volatility in the near term. As far as we are concerned, there are several actions in place. Srini spoke about infusing AI in all our programs, especially in our application maintenance services, infrastructure services, and across, BPS. There are efforts that are there ongoing in order to drive AI infusion and drive that productivity. That will be a big lever. This is also a quarter with furloughs, which has played into our guidance range as well. Right, so that is a headwind that we'll have to watch out for and see how that lands. So there are some headwinds as we start the quarter, both in terms of large deal ramp-ups, which are typically lower profitability, furloughs, and we have enough and more levers to try and offset some of them. And our endeavor would be to keep it in a narrow band. Outside of forex, we don't know what the rupee volatility does.
Saurabh, your headcount increased by 2,260, and this is the highest that we've seen, at least in the last 3 years, I think. What is the full-year fresher addition plan? When do you plan to give wage hikes? And if you can tell us the H-1B visa hike impact.
Yes, I'll answer all these. Let me start by saying, if you look at the entire people supply chain ecosystem, there's been a quarter of lower attrition, higher utilization. We onboarded about 2,900 campus hires and overall net headcount going up. We will continue to add people based on the demand requirement. We have, as you see, we had a robust bookings in the first half, 9.5 billion. So as we execute to revenue on that, we will definitely keep on hiring, both at the fresher as well as laterals. So that is the way we move forward. From a attrition perspective, we feel that given the overall macro environment and the sentiment, we see that this will continue in a very narrow band, and we are confident it will not go up in the near term. Coming to wage hikes, again, given the uncertain macro environment, the intent, we haven't decided when to give the wage hike, and as and when we decide, we will announce that. Very uncertain environment continues. Third, on H-1B, very limited impact. 80% of our US-based employees are locals. We have been adding about 250 to 300 H-1Bs every year. We are very confident that even with the change of the law in the US. It will not impact from a supply side. Demand moves up. Near term, long term, we will look at increasing our presence from our delivery centers in the US. Look at a campus hiring there. But we are very comfortable and we see minimal impact from an H-1B standpoint.
Would you look to bring down this 250, 300 people that you typically send on H-1B visa and maybe look to increase your local hiring?
We will increase local hiring and we'll have to see how things pan out because when before the next cycle come, I hope clearly some unanswered question, there'll be more clarity on the policy changes and then accordingly we will take a call in terms of what needs to be done.
The Wipro HR head saying that so far the company has not taken a call on their wage hikes on account of the macro uncertainty. The last wage hike given to the employees was 1st of September, so about a year back. So 1 year is gone, and so far at least, the company has not decided on a wage hike. Even for TCS, the wage hike cycle, this time was about 17 months. Instead of giving it on 1st April, they gave it on 1st of September. But that's Wipro for you. And as you can see on the screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current historical financial statements, price charts, technical indicators for each stock, each of the individual parameters considered for the calculation of the 4 factors, and they're assigned to the score, which is then aggregated to arrive at an overall Q factor, G factor, V factor, and T factor score. Remember, this is not a buy or sell recommendation. Any investor viewer is advised to carry out necessary diligence in their own through a certified, registered financial advisor or for their investment decisions. Get into a break. On the other side, we'll connect with Siddharth Khemka, Head of Research, Wealth Management, and Motilal Oswal, Financial Services.
Okay, welcome back. There's 20 minutes to go for the market open, the pre-open session to kick off. Manisha is now joining in with a roundup of everything which is happening from the world of commodities. Manisha, what is going on? I mean, right on cue ahead of Dhanteras, another 4%, and that's not small at this level.
Absolutely. Prashant, there's something to read into that because every day in the morning as you wake up, and that is the time when, Asian markets are open and China perhaps is doing a lot of buying. Because if you look at the pattern in last many, many days, it is Asia that opens gap up, almost up by $40 to $60. Europe is seeing consolidation, even some profit taking there, and the New York markets go either ways for that matter. So, but the buying really starts in Asia every day, and with that, we've seen an all-time high of $43.80 an ounce. Now, for the Indian markets, we are trading at a 1,30,000 rupees for 10 grams. I mean, this is a huge, huge run-up, and interestingly, you also have the sovereign gold bond redemption coming into the markets for people who bought it in 2016, 2017. The buying level at that point in time was at around 2,860 rupees. They are redeeming it at 12,600 rupees. That's a 340% of an absolute return that these people have seen. So huge gains is what we are looking at in gold. Same goes for the case of silver as well. We've seen 85% of a gain till time, another all-time high coming in for silver as well. And that seems to be spilling over into other precious metals because when you look at palladium prices, they are trading at a 3-year highs. More gains coming in for this one. Platinum is trading at a 14-year highs. We've seen a 92% of gain in platinum in this year itself. So very strong gains continuing. Of course, there are those credit concerns now coming in from U.S. The U.S. government shutdown just about continues. The central bank buying has been very, very strong. The U.S.-China conversations, the kind of rhetoric that we see coming from both countries is also on. There's no reason really to sell, go short, or go for profit-taking. There are more highs that the markets are anticipating here.
Thank you, Manisha, for that. Siddharth Khemka, Head of Research, Wealth Management, and Motilal Oswal is now joining in. Siddharth, what's the view that you all are taking on the frenzied rise that we've seen in gold prices? And some of these gold financiers have had a good run. So Manapura, Muthoot are both up 50% this year, while some of these gold jewelry companies, whether it's a Titan, Kalyan, Senco, no such luck. So what's the best way to play it? And then the view on gold from here.
Good morning, Rima. First of all, wishing you and the entire CNBC-TV18 team a very happy and prosperous Diwali. Wishing the same for all the viewers of CNBC-TV18. So I think we remain constructive on gold. We believe that there's a structural shift that central banks across globally are taking a step of the de-dollarization where gold fits in well. And I think the buying continuously happening on the central banks, including the larger ones like some of the BRICS countries, including China, India, Brazil. I think that would continue to keep the prices firm. And the best way to play, you rightly said, yes, one of the best ways to play the rising gold prices is through the gold financials companies. On the existing loans, the LTV improves, so the delinquencies comes down, the asset quality improves. But for the newer growth as well, with the same gold volumes or the quantity, now you can lend much more. So the lending propensity that increases. So overall, very positive from gold financing companies. Another way to play is through the commodity exchange MCX. I think there also the gold volumes, the precious commodities volumes have been over there.
We'll come right back and we've got more questions for you. So let's do that. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. It's that part of the show where Hormuz joins in to tell us about all the big movers in trade with heavy volumes. Hey, Hormuz, morning.
Morning, Nigel. Interesting list of stocks yesterday. BLS International tops that list, and the stock was up 16% in yesterday's trading session. Interestingly, receiving an order from the MEA, and as a result of which a 16.5% up move. It snapped a 6-day losing streak in yesterday's session. And when the stock fell, when that announcement came from the order department, the stock fell 11% on the 13th of October. In comparison to that, yesterday's volumes were 3x of those levels. We had almost 6.5 crore shares that were traded yesterday compared to a 20-day average of just over 31 lakh shares. And out of those 6.5 crore, only 50 lakh shares were marked for delivery. You take that 20-day average, it comes up to around 8.5 lakh. The Share India Securities was the top gainer on the small cap index yesterday, a 20% upper circuit on the stock. It snapped a 3-day losing streak as well in yesterday's session. And in comparison to Wednesday's volumes, the volumes on Thursday were 6x of those. And we had more than a crore shares that were traded yesterday. The 20-day average comes up to only 4.5 lakh. And out of those crore shares, 35 lakh were marked for delivery. And in comparison to the 20-day average, which is just over 2 lakh. The stock has broken above some of its key levels. It's broken 100 DMA of 163. The next level to watch is the 200 DMA, which comes up to around 183. And lastly, a stock has been in focus ever since the GST reforms kicked in, Parag Milk Foods. That stock saw an up move yesterday of around close to 9% as well, and it snapped a 3-day losing streak. But out of the last 20 odd trading sessions, the stock has gained only in 6 of them. And Thursday's volumes were the highest in a month. We had close to 34 lakh shares that changed hands. The 20-day average is 11 lakhs, so 3x of the 20-day average. And on the volumes front as well, delivery front, 9.5 lakh shares for delivery compared to a 20-day average of just over 4 lakh shares.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go back to Sid Kemka. Hey, Sid, good morning. Festivities are here. Bulls are feeling good. What about Eternal? Yesterday it had massive volumes in the last 40 minutes or so as we dissected those numbers. For a longer-term investor, they would like the trajectory that they've laid out. The problem is in the near term, there's going to be a lot of focus on growth, which in turn could delay profitability. What's your take on the stock at around 340 rupees?
Good morning, Nigel. I have festive seasons here, so wishing you and the entire CNBC-TV team happy Diwali. Eternal, I think, still in the investment phase. I think results were mixed in some sense. Revenue were far ahead of our expectations, but the food delivery order value, that was a big miss. If you see the food delivery, the growth remains soft as muted discretionary demand that kind of impacted. I think what we're seeing is that post the GST rate cut, the demand has definitely picked up. So Q3 could see some acceleration in terms of growth. The good part about the results, margins, EBITDA margins, so adjusted EBITDA margins that improved by 5 to 5.3%, and the long-term GOV growth target of about 20%. But for FY26, it is expected to be closer to about 15%. So I think net-net, the quick commerce expansion that continues aggressively. So the medium-term margins that will be a little bit more under pressure, but that tailwind is expected to start kicking in FY27. So the platform fee hike that supports margin improvement growth. I think from Q3 that will see some improvement. So I think overall near term, driven by the higher investments, the stock could remain a bit softer given the run up that it has already seen. But the long-term growth story that continues to remain intact. We have a buy rating and a target price of 410 on Eternal.
Okay, actually, why not revisit the Eternal numbers, Nestle as well, which of course is the brokerage call of the day. Mangalam is back with us. Mangalam, take it away.
Well, if you look at Eternal's numbers, there was a slight disappointment on the EBITDA front. The street was positively surprised by the revenue as well, and that's exactly what the brokerages are saying as well. CLSA, for instance, they have a high conviction outperform rating with a target price of 450 rupees. They're saying it was much stronger than expected net order value for Blinkit and a higher contribution for the food business as well. Blinkit adjusted EBITDA was lower than their expectations, that largely because the pace of consumer acquisitions. HSBC too has a buy rating, a target price of 390 rupees. They're saying that quick commerce margins disappointed due to heightened marketing and expansion costs, but valuations aren't very undemanding right now, though strong quick commerce industry tailwinds and superior execution drives buy rating. Nomura has a buy rating. They call it a mixed bag, where food delivery was marginally below expectations, and the net order value growth is what they expected to be 15% in FY26 and 20% in medium to long term. Let's see whether that comes about or not. On Nestle, it was a very strong set of numbers, and the stock price told you that as well. HSBC, however, has a hold rating. They're saying that the second quarter performance was impressive, a key surprise coming in from the revenue growth, and more importantly, cost inflation is moderating from here on as well. Macquarie too, neutral. They have a target price of 1200. They're saying stronger than expected double-digit domestic sales have actually offset the gross margin miss, so they have upped their estimates by about 1%. And Goldman Sachs has said that double-digit top-line growth is fairly strong, and they believe margins are likely to improve from here on as key inputs have softened. But remember, for all these positive comments, most of the brokerages have either a hold or a neutral rating on Nestle. So let's see where that goes from here.
Okay, got that. So now just moving on to another sector, Jio Financial. I believe you were listening in to the conference call, and it's also, the company's hit an inflection point in its business where now the business income is more than the treasury income. What were your takeaways from the numbers, and what does it mean for the stock?
Yeah, so I think if you look at overall, we tried and listen to the Jio Financial numbers before the Reliance numbers coming in. So the company has been focused on setting up the newer segments and nurturing them and gradually expanding over the past 2 years. They have strong foundation that has been built. In terms of financial performance, I think there is a good growth that we are seeing. Total income grew about 44%. The pre-operating profit was a bit flattish because of the higher costs. The company, we believe, is reaching at an inflection point where the business income is now higher than the treasury income, given that they have a large treasury of Reliance shares, and that is the core income that they are getting. So I think gradually the core business, that is of the lending on the other operating businesses, that is definitely picking up well, and we believe that the company, given it's well capitalized, they also issued recently the preferential issues to the promoters. So well capitalized for the growth. Businesses are setting, so see strong growth for Jio Financial going forward.
Okay, Sid, we had to take another quick commercial break here. 4 minutes to go for the market pre-open session to kick off. We'll come back more with Siddharth on the other side. I think we should have our pre-open rates as well. IT, of course, continues to be in focus, and we have who else but Bhavin Shah, founder, CIO, CEO at Samiksha Capital, to talk about the performance of the IT services space. He's a veteran IT analyst, but of course runs his own fund now. Stay tuned, coming up. Okay, welcome back. Just about a minute to go for the pre-open session to kick off. Srikanth and Siddharth Rai are with us with their technical trading ideas. Gentlemen, great to have both of you here. Wish both of you a very happy Dhanteras and of course Diwali as well to you, your loved ones. Appreciate your time. Srikanth, you go first. How are things looking? What's the setup? Nifty Bank almost at new highs yesterday. Nifty's done pretty well in terms of breaking out of these some of the important resistance levels yesterday. Headed higher in an uninterrupted way, or maybe a bit of a pullback?
Good morning, Prashant. Good morning, everyone. And first of all, let me wish each one of you a very happy and prosperous Diwali. For markets, yes, there also we are seeing good amount of activity. It's a broad-based activity that we are witnessing. BFSI as well as metals and a few other indices, especially we can see, we are seeing activity in capital markets as well as new age technology stocks. Yes, Bank Nifty has broken all its important levels and now it is very close to its all-time highest level of 56,500 sort of level. So there, the Bank Nifty is having next leg of important resistance. Above 57,600, the next level to watch out for will be 58,000, 58,500. But broadly, I am of the view that the Bank Nifty is heading for 58,500 and any correction from current levels close to 57,000 will be an opportunity. For Nifty also, the view is similar. Already it has broken 25,500, which is something really positive. And today, in case if we see the market is dropping to 25,500 sort of levels, then there we should look for adding long positions. There also we are expecting 26,000 very soon.
Siddharth, good morning. What about you?
Good morning, Prashant. Thanks for having me on the show, first of all. And again, wishing you and the entire CNBC-TV18 team very happy and prosperous Dhanteras and Diwali. See, if we talk about Nifty, Prashant, the momentum that has built up in the past two sessions has been very meaningful. We discussed this just a couple of days ago that once Nifty manages to go and sustain above 25,300, we can expect a full-blown up move, and that's exactly what has happened in Nifty. And again, also, not just this, in the past two sessions, Prashant, the support for Nifty has shifted upwards from 25,200 to 25,500 now, which is a very strong bull case scenario. So now, from here on, we can definitely see some bit of consolidation and maybe some volatility because of the earnings season. But overall, Nifty will be able to absorb any dips if they are there. But as long as we are above 25,500, it is a very big positive for the market, and we must expect 25,800 and 25,850 to be hit just when the market is able to take out the previous multi-month high of around 25,670. So this is a very strong market, and right now the momentum is very good, and we must stay with the momentum.
Okay, all right, stay with the momentum. Good morning, gentlemen. Sid, you go first then. Tell us about individual stocks as well. A lot of trading ideas, so give us a couple.
Yeah, sure, Nigel. Hi. See, there are two stocks, both of them we have to buy. The first one is United Spirits. See, the stock has been in a consolidation for about 3 months now. For the past 2 days, there is a very strong up move from the lows, and also the stock is nearing a very good level from which a fresh momentum can be seen building up. So United Spirits can be bought in spot right now. The price is around 1360-ish. The stop loss will be at 1345, and our targets being first target 1395 and the second target being 1415. The second stock is Dabur. See, there was a very deep correction from its highs for about 1 month, but for the past 1 week there has been an attempt for a turnaround, and the stock is trying to come back above 500. In fact, it just came back above 500 yesterday. So here again we can see a good momentum building up. FMCG is also coming in flavor for the past few days. So Dabur can be bought here. Right now the price is just around 500. Our stop loss will be at 493, and targets being first target 519 and the second target being 525.
Okay, all right. Let's go across to Srikanth. Srikanth, what about you? You've got a couple of picks as well.
Yeah, Nigel. See, metal stocks, they are doing really well. And in that specifically, most of these stocks are very close to their important support levels after correcting for last 3-4 days. Hindustan Copper, Hindustan Zinc, as well as if we consider GMDC and Hindalco. But in that particular basket, Hindalco is showing a lot of momentum. From here, the stock can move towards the levels of 800, 810. We can keep stop loss around 770 for the same. There we are expecting further more activity. So we are bullish on Hindalco. We also like Reliance Industries, as we are expecting market to move towards 26,000. Reliance Industries should participate in this particular up move. That's my view. Currently, the stock is forming some rounding bottom sort of formation, and it has broken its important resistance level at 1319. So from here, the stock can move towards 1440 or 1450. It's a buy at current levels with a stop loss close to 1370.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you all for another call in the next few minutes or so. But let's welcome Bhavin Shah, founder, CIO and CEO at Samiksha Capital, who joins us on the show. Hi, Bhavin. First of all, festive greetings from all of us here at CNBC TV18 to you, your family, and the entire team as well. It's been a while since we spoke, but good to have you on the show. Well, all right, Bhavin, we want to understand your reading of the tech space. There's an equally bullish and bearish argument as well. Now, post the results, the kind of feedback you get is maybe the downside is limited. The problem is the upside as well. I mean, there's nothing really to go in there, rush in there and buy the stocks. Which side of the fence are you on? And what is your reading of the recent results?
So I think, as you said, the expectations have been reset to far lower levels, both in terms of profitability and more important in terms of growth. And I think against that, the results are coming in as sort of expected. And I would say that, on the margin, slightly better. I would say, there has been some slight improvement in guidance as well, and so on. And I think I would say is that, yes, there is that big deflationary impact of Gen AI boosting significantly the productivity, and as a result, the effort required is going down for the same activity. But I think overall, as time goes, there will be more things to do, and also, the whole H1 visa curbs, on a higher cost, will only help with the offshore. So I would say that for an investor who is not expecting, huge returns but pretty safe, say 10 to 12% returns, the opportunities may be starting to emerge in the sector with respect to companies available at 5 to 6% free cash flow yield, probably delivering you sort of mid to high single digit, even closer to maybe high single digit cash flow growth in coming years. So I think it's not a bad place to be actually compared to where we were for last 6 months.
This is the most optimistic, Bhavin, I've heard you sound on the technology space. On the margin, things are improving. Perhaps the industry is heading towards a high single-digit kind of a growth rate. And coupled with the free cash flow yield, you could hope for a 10-12% kind of return. So what have you been buying?
Well, I think we in the large cap space, we have been buying Infosys. Which I feel is, has been a bit more consistent in terms of what they've been delivering. And I think, yes, the valuation is attractive and the order book is also reasonable. So don't have very high expectations, but as I say, something like 10 to 12% return. I think there can be space in the portfolio for something like that, especially when you look at the large cap space overall, where there isn't, too many names that give you much higher returns than that.
Okay. But on Infosys, since you've been buying it, are you a bit disappointed that the company didn't raise the upper end of the revenue guidance? Considering that the first half of the year, the company has shown good momentum. The execution's been strong. There is no change in the overall demand environment. I mean, you would have listened into the call. What was your read from that?
I would think one can be somewhat disappointed by that. But, at the same time, given there is fair bit of uncertainty still out there, I think, the US, related issues continue to pop up. Maybe they want to walk a cautious path in that regard. But I think, if there is a potential for slight upside surprise from that, that's one can live with that rather than having a number that later on gets revised down. That's how I would look at it.
Bhavin, hi, morning. Greetings to you on Dhanteras and Diwali. And how many Diwalis now, Bhavin, running Samiksha?
10.
I used to, time flies, right?
Yes.
This is, IT is the sole sort of, work that you used to do. And of course, now of course, your fund has done so well. So congratulations to you and your team for that as well. I think in the small cap space, I think, Bhavin, Sonata has been a name that you've owned for a while. You still own it?
No, we don't own it right now.
Okay.
We could revisit it. I mean, I think in the small cap space, we own Mastech.
Okay.
Stock hasn't done well recently, but I think, we think that there is, the top leadership of the company is is where we feel, they will deliver the goods. And I think the opportunity to deliver growth in small cap continues to be reasonably good. And so that's where we are, and then we also have other opportunity. I mean, we look at other names related to IT. Reddington is one that we have owned for a while, and we continue to like the prospects for that kind of business.
Okay, Mastech, Reddington. Just a slightly philosophical question, but since it's 9:10, 5 minutes to market open, maybe a brief response to this, and we can chat about this later. As a veteran IT analyst who watched these companies from their infancy, what would you tell them in terms of can they, so one of the companies disclosed there was AI revenues recently, but the point is, unless this is taking away growth from somewhere else and overall growth remains the same, I mean, will that really matter in that sense? In terms of their communication, or actually even what they should do here in this new environment, what would you tell them, Bhavin?
So, my observation is that, and this is the same thing that happened when the whole cloud and the platform solution revolution came about, that we saw Accenture a fair bit ahead compared to the leaders in the Indian IT space. And I think the same thing is repeating, where we can see that Accenture had a reasonably strong commentary given the circumstances, and also the investments in the, in retooling, retraining their engineers for AI has been a bit ahead of the Indian IT companies. So I think that continues to be that, that Indian IT companies tend to be quick followers. I mean, I think in a way it is okay because the customer relationships are very sticky, and so you don't lose customers just because you are not the leading edge. But I think maybe some more investments in understanding the next big trend and investing a little bit ahead of time. I'm not saying go and invest in, say, the product opportunities and so on and so forth, if that's not sort of the core DNA, but at least grabbing the new technology shifts a bit early and having the right set of people for that, I think that is important. And I think maybe that's where they will have to work on in the future.
Okay, Bhavin, we'll leave it there, but we'll have you back for a longer chat. Good luck to you as you continue to execute well with Samiksha. Thanks very much for joining us on IT services right now. Nimesh is here with the standout brokerage report of the day. Nimesh, good morning.
Hi, morning, Prashant. So today's standout is on Max Healthcare. UBS has been bullish on the stock, but they further raised the target price on Max Healthcare to 1550 versus 1350 earlier. UBS believes Max is a super compounder, and it's a best position in terms of delivering capacity as well as earnings. So the CGHS price hike is a meaningful tailwind for the entire sector, and that will benefit Max Healthcare as well. So UBS is estimating an 18% CAGR in bed additions between FY25 to FY28, and that would mean that Max can deliver an EBITDA and EPS CAGR of over 30% in that period between FY25 to FY28. So that's the reason why they believe that premium valuation is justified, and they further raised the target price on Max Healthcare now to 1550 versus 1350 earlier.
Okay, all right. Thank you very much for that. So keep an eye out on those stocks as we open up. We want to also highlight Reliance Industries and the Investec note, the Investec view, which is coming in this morning. So over to you.
So ahead of Reliance earnings, Investec has come out with a note initiating coverage on the stock with a buy call, and target has given is of rupees 1890 per share. It says amongst all the sectors, energy should rebound on back of constructive refining margin, new petrochem capacity and stable upstream earnings. It believes that it offers a compelling blend of cyclical recovery and structural growth, and even group EBITDA should double by FY27.
All right, right on time. So thank you very much for that. So that's Reliance for you. Maybe just take a quick look at some of these stocks as they are opening up. I don't know if you have time for it. And, you know, Infi, Wipro, etc. I think we've already highlighted. Maybe look at something like a Gokuldas, right? I mean, Gokuldas Exports has kind of become this one stock to read the temperature on India-US. Was up 8% yesterday, 816 now. Put up BSC, which was up, I think, yesterday, 3-5%. We'll look at some of this. I think there's a Bloomberg story on this, on what SEBI plans to do on HFTs and deepening cash markets, etc. So in a bit, we've got Nifty, which is 25,500, about 0.18% lower. Nifty Bank is ticking slightly down, but nothing very much, about 0.25% down there. The sensex is down about 0.25%. Small cap index is absolutely unchanged, nothing on it. You've got the mid cap index, which is unchanged as well, 60 points lower, 59,190 is where we are starting. So this is a bit of a flattish start after what has been a furious move yesterday, of course, especially yesterday, but even over the last many trading sessions. 20 points lower. The Nifty heat map up on your screen, it's more down than up, but not by very much. Asian Paints on one end, Nestle, Max is something which Nimesh was highlighting. It's there up there amongst the gainers. And on the downside, as Rima has been saying, you've got IT, Infi, Wipro, and there's HCL Tech as well. Rima.
Well, as you pointed out, it's IT on the way down. The Nifty IT index has slipped more than about 0.5%. Wipro is the big casualty today. Stock down 4% at open. It slipped below the 50-day moving average. Wipro now down down to levels of 243. Year to date, it's lower by 20%. HCL Tech under pressure. Tech Mahindra, Infosys also weak in trade, and TCS is losing ground in sympathy. If you track the performance of IT so far this week, broadly lower. This is the week where we got all the big numbers from the IT majors. Week to date, Infosys down 4%. TCS is down 2.5% and Wipro down over 2%. So despite a slightly better showing versus expectation, IT continues to remain under pressure and still a bit unloved. Eternal is also losing ground. Eternal is down close to about 1.2%, but this comes on the back of the stock being virtually at record levels 2 days back. And since yesterday, even yesterday, once the numbers came out and the street digested that the jump in numbers was an account of the change in the business reporting. They've moved to an inventory-led model versus a marketplace model, and that explained. Otherwise, the numbers were okay, but the stock is seeing profit booking 1.9% lower on Eternal, but the brokerage view remains quite bullish. CLSA has a high conviction outperform, target price 450. HSBC has set the target price at 390. Adani Ports, Ultratech Cement, ONGC are some of the other drags in the large cap space. But on the way up, it's consumption all the way. Nestle, big mover yesterday, 4.5%. It's followed it up with another 2.5% gain, so continues to be bid up. Asian Paints is rising. HUL is gaining, and Reliance Industries also seeing buying ahead of numbers later today.
Well, that's right, Rima. You know, a limited point with regard to Eternal. The stock was very volatile yesterday, but I think one comment that came in for the management, that break even is not even a milestone at this juncture, implies that they're focusing more at growth. And maybe the near-term investor may not be too happy about that. And that explains why the stock is down close to around 3.5%. Mind you, longer-term, story looks good. They're guiding for very, very good growth, good turnaround in terms of profitability. But that explains why that stock is under pressure in today's trading session. Moving to a few more names. Rallis from the broader markets, that's catching your attention. So that's a positive earnings reaction that we've got out there. Stock up close to around 4%. Add to the list, I think, we should get a couple of these other names. Vikram Solar, yes, that's the other one that I was looking at. That as well is higher in today's trading session, reacting to a positive set of numbers. Vare actually opened with gains and then that got sold into. So that's the other stock, in fact, that's now flattened out after opening gap up with a gain of around 2%. What else is giving Wipro as well as Eternal Company on the downside? JSW Infra, well, that stock is down close to around 3%. Z Entertainment as well, they were guiding for very, very good times ahead. However, just going by what they've done at the half-year mark, doesn't seem like that guidance could be achieved. So for the time being, after the stock dancing away to around 145 earlier this year, the stock has come in for some selling pressure.
Well, I think, Nigel, you got slightly sideways kind of start, right? So neither here nor there. So can't really put this as a bad start, neither, of course, not a good start. So somewhere in between. IT, I think the Nifty IT index should come up, and I think there will be some pressure. Coforge, for example, which is still not reported, but which is widely expected to report something like a 5-6% kind of growth, is down 2%. But it's Wipro, HCL, etc., which are taking a bigger bite out of prices. Swiggy is down 2.25% as well. So that's another one which I just want to highlight. Ather is down 1.5%. Z, of course, results 3% lower. JSW Infra 3% lower. That's results. Tata Com has had a very, very sharp move. In about 5-6 days, it's moved from 1600 to 1950. So Tata Com is taking just a breather. That's it. I mean, the top volume-led stock, or not stock, but a ticker is silver.
Yeah.
Silver Bs are up 4%. And that's by far the biggest volume-led gain. And we have it. It'll come up on your screen, Silver Bs, if we can. So there's a breathless rally in precious metals, on and goes. 4% on gold. Silver, of course, on the coattails of what gold prices are doing, and so on and so forth. Look at Share India. My God. Oh, boy. Share India, 194 rupees. It's a broker, basically. But the stock will come up. I think we have the stock. 2 days back, stock was $130. It's 190, 195. And volumes yesterday were some of the highest we've had in Share India in a long time. And today as well, it's by the way, the third biggest. I'm just mentioning it because it's the third largest volume-led gainer on the NSE. Never comes up with this much volume at this point in the day, but it is. So just thought I'll make a quick mention of it before we move forward. So that's what's coming on. Well, Hiren Ved is with us. He's Director and Chief Investment Officer at Alchemy Capital Management. Hiren, good morning. Happy Dhanteras, happy Diwali. Great to have you with us here.
Season's greetings to everybody.
Yeah, I should ask you, how's the traffic? I mean, I got out yesterday.
No, today was very easy.
Yeah?
Yeah,
I think the evenings it gets a
evenings is a little tough. Yeah. I guess
unless people have started the Diwali holiday already.
Diwali kids out of Bombay, in Bombay.
Out of Bombay.
I think people are visiting, and it's just that festive mood, right?
Yeah.
And it's still raining. Yesterday in the evening, it was raining in some parts.
Oh, is it?
Yeah. I mean, how is the market looking, Dhiren? What's the? Actually, let me ask you straight up. क्या लिया? ये अब तो दिवाली है, तो कुछ बताइए.
Well, we were all fully invested, so but I think broadly we've stayed with the same themes that we've been carrying on for many years. But I think incrementally the only thing we've done is added a little bit of autos.
Yeah.
Because I think it looks like that the cycle is now, after a very long time, the cycle is turning. So, combination of interest rate cuts, easy liquidity, GST cuts, finally is getting the mojo back.
But two-wheelers?
Both, two-wheelers, four-wheelers. I think...
Some dealers we were talking to, they were kind of saying that with four-wheelers especially, is that GST boost durable? I mean, or by November, by December, again, you're going to get into that inventory build-up kind of situation. Two-wheelers maybe, because the impact is more.
I think two-wheelers definitely has got off to a very good start. Four-wheelers, at least for now, looks like that things have started to move. I think after a long time, we are seeing, we even read that small cars, which were not doing well, are starting to do well. So clearly at the lower price point, things are beginning to, improve. But I think overall, auto should do okay. Typically the cycle takes a long time to kickstart. Once it kickstarts, it at least lasts for some period of time.
Hiren, good to have you in the studio and to welcome and festive greetings to you, your team and everyone at home as well. It was interesting you spoke about autos. People will be saying last year wasn't a good year. For you all, it was a very good year. One of the top picks, I think, was Force Motors.
Yeah.
Out of nowhere, that stock is up 100%. And now you're talking about the lower end. But I think the Force Motors play was on premiumization, used across, tourism or various other verticals as well. Any comment out there? Because that's had a great run. The auto index is catching up in 2 months. This one in the last 1 year, I think it's up 150%.
Yeah, I think it was more of a bottom-up pick rather than a pick on auto as such for us. It was a stock which was long forgotten by most investors, you know. They don't talk to anybody, etc. But I think if you look at the kind of products they have, the new Urbania is phenomenal, right? And our dealer checks suggest that there's a lot of demand, both from tourism, you know, whether it is from the healthcare ambulance sector, and more recently from the GCCs that are being set up, right? So that's a nice little van which carries like, you know, 10 to 12 people.
I've used it. It's fabulous.
It's fabulous.
Yeah.
I think the other less understood aspect of Force is that they also make engines for BMW and Mercedes.
Yes,
right?
so it's a play.
So that's a great way to play premiumization in the car business, right? So, and then they have a joint venture with Rolls-Royce to make engines for exports. So I think it's a great engineering company. So you could play both premiumization plus, you know, Gurkha, the four-wheeler.
Defense orders also.
Has found some place in defense. So it's a very interesting pick. It was, you know, it was kind of out of the woodworks. Nobody was looking at it. Numbers have improved. So yeah, I mean, that's played out quite well.
Still positive out there.
Yeah, I mean, you know, typically we take a fairly long view on many of these companies. But again, a clear disclosure that we and our clients, we do own Force in our portfolios.
I think you've spoken, when we last spoke to you, you spoke about NetWeb.
Yeah.
I think that's a stock. But this time, just wanted to get your broader thoughts in on IT. I mean, are you getting some signs that, you know, after being unloved, after underperforming so much, do you think the tide is turning? We were just chatting with Bhavin Shah, and he said that, you know, maybe growth can now move from low single digits to mid to high single digits. Plus, you throw in the free cash flow yield, and maybe you can make a case for a 10-12% kind of a return in IT stocks.
Yeah, I think anyway, expectations were very low, right? And I think while absolute growth is nothing great, but compared to expectations, I think things have been better. So whether you look at LTIM numbers, Persistent, for example, has done relatively better. So it looks like that the sector may be bottoming out, right? We still believe the large cap stocks can probably give you late single digit, early teens kind of returns.
Okay.
Right? But yeah, I mean, there is safety, there's cash flow. But it looks like that the sector looks like bottoming out now.
So do you want to quickly tell us the IT stocks, the services plays that you have?
So I think for the longest time we've owned KPIT. So we continue to own that. We continue to like the company. I think we had a soft patch in the first half of this year and all of last year. But looks like that hopefully this quarter should be the last of the soft quarters, right? And I think things from there should actually bounce back. And the other one is that, you know, we have an exposure to a company called Latent View, which actually is a derivative play of, you know, AI and machine learning. They do a lot of data analytics work. We think which is a precursor. I mean, as AI spending moves from the infrastructure layer to the software application layer, I think a company like Latent should do phenomenally well. But again, you know, we own both these companies, so full disclosure.
KPIT and Latent View.
Yeah.
What's the new thing? Could yeah, I'll leave it at that. I have a few questions, but I'll leave it.
Nothing really new. I mean, I think broadly, as I said, that you know, we had our you know, areas where, I mean, we're clearly growth investors, so we look to you know, in whichever sector, wherever we think that we have quality companies with above average growth potential over the long run is where we are positioned, right? So we are not necessarily trying to do any stuff which is very contrarian, at least from our point of view.
IPOs, anything interesting, which have come recently listed, some have listed below the issue and then they've gone on to do well, that kind of stuff, anything? Which comes?
No, I think the last we participated a little bit was in a very small company, but we like it, is a company called Europratik, right?
Okay.
So in the building materials space.
Okay.
We think that's quite interesting. I think LG was very interesting, but it's kind of opened with a
50%.
bang. Yeah. So I think many of these companies, I think Urban Company and LG were good IPOs. But I guess there's a lot of optimism right now immediately after listing. So we'll kind of let it simmer for a while. And at some point in time, when we get a good entry point, we'll certainly look at some of those.
All right. Hiren, what about gold? What's the view on gold, first of all? Do you think it's running a little too quick? If you're allocating fresh money, what would be the split, between gold as well as equity as of now? And do you think there's another way of playing gold, maybe the financiers or the likes? I'm not sure if you want to give us a view out there.
So, again, I'm not an expert on precious metals, right? But I think gold's done phenomenally well. I mean, we all have discussed there are several reasons, geopolitical,
central bank.
So on and so, central banks buying. I think the way we've played the precious metals and commodities is by investing in MCX.
Oh, okay.
I think for us that was a more interesting way of...
in a very profitable way.
And a very profitable way. It's a platform, an exchange is like once your fixed costs are done, as volumes grow, everything flows to the bottom line.
Yeah, I think the MCX rally really started a couple of years back when they introduced options, right? I mean,
correct.
That's the...
So I think until recently and even today, like a lot of the volumes were all futures.
Correct.
And it's really when options started is when the volume started to improve dramatically, right? And today you have the three most traded commodities where they are a clear market leader, right? Crude oil, gold and silver. I think there are a lot of interesting products that they are planning to launch. Like if in today's day and age, if they can launch a 1 kg silver contract, I think that would be a big hit, right? So there are a lot of products which are at the approval stage. I think as and when they get approvals, I think we should see a fantastic...
And unlike stock exchanges, NSE, BSE, MCX is no second in that sense so far, right? I mean, no real...
Very difficult, once you build a leadership position. I mean, NCDX tried a lot, but they just couldn't do anything. I think MCX has now created that ecosystem. Very difficult to disrupt an ecosystem like that once you have buyers and sellers on both sides, right?
What about capital market plays? Everyone's talking about us having this long runway. Stocks ran ahead of themselves. Some of them cooled off. Interested in that theme? A few of these themes I wanted to ask you about. Capital market plays, EMS as a space, and maybe the platform themes. Among the three, since all of them
We like all three of them.
All three of them, okay.
Yeah,
you want to name a couple of stocks, will be great. Let's go for it here. It's Diwali.
No, I think I think in capital markets, as I said, we own exchange.
Yeah.
Clearly MCX is a great play there. We do own some asset managers and wealth managers, right? So we like the entire theme. We do believe that there is a structural long-term play. And that's also led to valuations getting re-rated in that area. So, our sense is that we like the business models because all of them have great operating leverage. So whether it's a asset manager, wealth manager, or an exchange.
They'll do well.
Right. So I think they will do well. So we have spread our exposure across all three, right? You mentioned platforms.
Yes.
Clearly, I mean, I think you have to be selective there, but we do have exposure to Paytm and Eternal, right? I think those are the two platforms that have demonstrated that they can not only scale but also achieve profitability.
Yes.
Right. But I think they're still, they're still on their way to achieving greater profitability. I think they have to strike a balance between growth and profitability. So I guess if you want dominance, then you have to focus on growth first, and eventually I think profitability will also come in.
All right, and EMS?
Again, it's a sector we like. Obviously, valuations are quite challenging now. And it's a sector we've been owning for quite a while now. It's not now. I think It's been a couple of years since we've been having an exposure there.
Okay.
Again, we have the whole range there. We have an exposure to Dixon. We have an exposure to, to Keynes, as well as recently, we do have exposure to some other names as well, like Sirma.
Okay, all right, Hiren. Good to have you in the studio. Thanks a lot for coming down.
Thank you.
And giving us a few ideas, few themes as well. Wishing you, family, team, all of them a very, very happy Diwali. And we look forward to catch up rather soon.
Same to all of you and to the viewers of CNBC-TV18.
Thank you. Thank you very much for joining in. Getting back to stock-specific action, it's Eternal in the spotlight. Mangalam joins in with a brokerage view.
Well, there was a mixed quarter that came in from Eternal this time around. There was good strength in the Blinkit NOV, but more importantly, there was some moderation in the food business NOV. Even though the revenue was higher on account of better take rates, the margins expanded a lot lesser than what the street and the company, both of them, anticipated. And that's what brokerages are, summarizing as well. While they are positive still on the prospects, CLSA still maintains their high conviction outperform and a target price of 450 rupees. They believe that much stronger than expected, net order value for Blinkit and much higher contribution for food delivery was good. But Blinkit adjusted EBITDA was lower than expected, largely due to the pace of customer acquisitions. HSBC too, they've written they have a target price of 390 rupees on the stock. They're saying food recovery remains slow despite increase in spends for the customers. Quick commerce margins disappointed due to heightened marketing and expansion costs. And valuations are not undemanding now, though stronger quick commerce industry tailwinds and superior execution keep them, positive on the stock. So that's why they have a buy rating. Nomura too, they call it a mixed bag. They're saying that the food delivery business was marginally below expectations. However, they do expect net ordering value to actually grow by 15% in this year and sustainably at 20% once the consumer sentiment turns. So now all you got to wait for is the consumer sentiment turning in the food delivery business and some sort of margin expansion coming by or loss reduction happening in the quick commerce business.
All right, Mangalam, thanks a lot for giving us that quick take on Eternal. Well, let's go focus on Big Boy Reliance. We'll be reporting its quarter numbers. Sonal is here with the key expectations. Sonal?
Well, a good quarter is expected from Reliance Industries this time around. Remember, the stock has been flat in last 1 year, trades at 21.7 times FY27 earnings. If we talk about a quarter-on-quarter number, it is expected to see an improvement. Revenues to come in at 2.46 lakh crore rupees. EBITDA expected to increase by 4% to come in at 44,511 crore rupees. Margins expected to expand as well to 18.1%. The profits, they will decline 22% on a quarter-on-quarter basis. But do remember, in the base quarter, there was a one-time income of 8,924 crore rupees because of that stake sale that happened in Asian Paints. So optically, number will look lower on a quarter-on-quarter basis. Now, what are we watching out for? Growth this time will be led by the Alto-Chemicals business because cracks have improved across products. Also, retail growth because of some GST cut impact that we'll see, and revenue per square feet will see an improvement on a quarter-on-quarter and on a YY basis. There could be some weakness in the oil and gas business because of some pricing issue. However, if we talk about the Jio number, Jio's EBITDA is likely to surge 16% on a YY basis, 2% on a sequential basis because of higher ARPU that came in because of the tariff hike. Retail EBITDA expected to grow by 11% on a YY basis. If we see the trend as well for EBITDA, this time around expecting a multi-quarter high EBITDA led by the Alto-Chemicals retail business. So watching out for those numbers today.
Sonal, thank you very much for that. And that's going to be the big one, right? Later today evening when they report numbers. Well, we want to focus on one of the prominent capital market companies now, which are in focus. I'm talking about Angel One. Now, Angel One reported numbers for the second quarter and revenues came in slightly softer, profits largely in line with expectations. We have Ambrish Kenge, Group CEO of the company, now joining us to talk about all of this. So just three things, as we always do before we go across to management. Second quarter results and outlook is something we'll focus on. They're taking a price increase, so expectations on with regards to volumes post this price increase and insurance, allied opportunities, wealth, etc. What's the picture there? So lots of stuff to talk about as far as Angel's business is concerned. Ambrish, good morning again. Thanks very much. Happy Dhanteras, happy Diwali to you, your loved ones, your team at Angel. Thank you for coming on.
Good morning, Prashant, and thanks for having me here. Good morning to, happy Diwali to you, Rima and Nigel. Good to talk to you again.
Absolutely. Amrish, I'll get to the numbers in just a bit, but I think as we've done for the last couple of quarters, and pardon me for that, there is just so much attention on not what is in the bag, but what can perhaps happen. So maybe it's a little unfair to ask you, but I'm going to ask you anyway. So humor me. What have you heard with regards to this? We put out a couple of stories recently. Our colleague Yash has put out stories where it seems to suggest that with regards to the weekly options product, the thinking perhaps has maybe undergone slight change. I mean, it's evolving, but at one point, it was looking like they were going to come down hard with a hammer, but doesn't look like it now. There was that consultation paper which was supposed to come out. So just anything you can tell us in terms of where this is at, what you've heard, have you been asked for any data, any views, would be very helpful, Amrish.
Yeah. No, Prashant, look, I mean, everybody's kind of looking at it because, any regulatory stuff where people are interested in. Look, we haven't heard anything from the regulator in this regard. Really, what has been out there is in the public domain. And it looks like some of the news that you have broken out, you may have more news on this. Our approach to this is, we have to focus on what we are doing, keep executing on it, keep serving our customers. But really, I haven't heard anything on either the consultation paper or we haven't been approached with that at all at this time.
Yeah. There's another story this morning, right? Because there is so much interest around this. I mean, it kind of sort of goes to the heart of to market action volumes, etc. There's a Bloomberg story which says in India, SEBI to upgrade HFT rules to ensure fair play. SEBI to prioritize deepening India's cash equities market. So, I mean, that second bit, to prioritize deepening India's cash equities market. I mean, I thought that was interesting, but we'll see as and when things happen. Tell us a little bit about this price increase that you're taking, Amrish. What prompted it and any implications off of it once it goes into effect?
Yeah. By the way, I mean, I know you didn't ask me that question, but since you sort of you kept that thread open on the cash market, I think deepening the cash market is overall a good thing. I think it will sort of deepen other markets as well as you deepen the cash market. On the price increase, really, it is not a real increase. It's really bringing it in line, making the pricing simpler. What we had different pricing for intraday and delivery, and now we have made the pricing same across the board, and that does create some uplift in the bottom line, but the real purpose was to make pricing simple.
But does it give a bit of a lift in terms of pricing overall?
Look, it does give a lift. It does give a lift in terms of our revenues, and most of it falls down to the bottom line. It will be about maybe 50 to 60 crores. We talked about that yesterday on our earnings call. It'll be about a uplift of 50 to 60 crores that falls down to the bottom line PBT directly.
All right. Hi, Amrish. Good morning. Good to have you on the show. This is Nigel on this side. Well, I just want to focus on that F&O broking side of things. It accounts for, I think, around 45% of your revenue ballpark. What percentage of this comes in from weekly expiry trades?
Look, yes, it's about 46%. Broking is 46% of our revenues. I don't have this handy, and it's kind of hard to calculate what comes out of it. So I don't have that breakup ready for you there. But in the end, actually, a large part comes outside of the weekly expiries because the expiry days are smaller than the overall days. But I don't have that breakup for you.
No worries. All right. Let's focus on a couple of aspects then. How do you see the margins trending from here on? If you could give us a number, ballpark, what should be the range? Because client acquisition is going to continue. You'll be putting in some more advertising cost as well. But what an impact will it have on margins? Keeping in mind that you have taken a price increase, so that will cushion some part of it. Targeted margin band. And also I wanted your comment on the market share. Because, though the market has been a little bit of a lull, but you seem to be gaining market share. At least that's what it suggests on a quarterly basis. So tell us more.
Yeah, no, Nigel, good question there. On operating margin, we have kept the same guidance. we expect to exit the year with 40 to 45% OPMs, operating margins. So that guidance remains, and we are pretty confident that we will get to that margins, because you've seen our revenue, this quarter, if you see, the PAT grew 10% quarter over quarter on an adjusted basis. On an absolute basis, it grew 87%, but we take some, if you adjust for IPL expenses, other things, it was about 10% PAT increase. Revenues also went up, net revenues went up by 5 to 6%. So we are continuing to show that increase. So we are pretty confident that that will happen. On the market share, and that's the important part, like if you see this quarter, I felt it was a really strong quarter, because you had sort of, remember last time when we were talking about it, the Jane Street stuff had just happened. We've had all these wars. ADTOs actually have gone down. If you look at quarter over quarter for the last quarter, in spite of all of that, we've shown a strong quarter and increase in our revenues. Market shares actually quarter over quarter, if you look at cash as well as F&O market share, they've gone up by about 70 bips. The commodity market share has gone up by about 800 bips, but that's aberration. So if you look at year over year, they're about 300 bips increase. So I think we are performing well. Our focus is on giving the customers the best experience we can give, the best products we can give, the best platform we can create. And then I think rest of it just takes care of itself. And market share is really important, because as things turn around, like last quarter, FIIs were really negative. Now, as all of that turns around, if you have a good market share, the tailwinds actually help you. So we really focused on giving a great experience and having a good market share there.
All right, let's focus on the optionality value as well, which could add value for shareholders as well. Tell us about the new Angel One Live Well Life Insurance. I think you have minority stake over there, 26% odd. What's the opportunity size out there?
Yeah, so they're into, they'll be into insurance manufacturing. They are a player who have international experience. They have some really good technology where, the face scan technology that can help. They are also a player which is very digitally oriented. We are also very digitally oriented. So there's a really good synergy there. So far, I think if you look at it, life insurance is really large in terms of how it's sold physically. We think there is scope to sell it digitally, and with this kind of a venture and us having a large base of consumers, them having a really good technology, and that combination we think is really good for the consumers also. With GST, some of these rates will come down as well. So I think long term, this is a really good prospect. These are all things that you're seeing from us, Nigel, where we're sowing these seeds, and a lot of these will actually germinate and create big trees, we think.
Yeah, just one, Amrish, on this massive rally in gold and silver, right? And I think you have a fairly healthy market share, although I think the market share there dipped a little bit in the month of September from a very high level. Could you tell us what is the sustainable market share in that segment, and what has this rally meant for you in terms of volumes on that side?
Look, we report commodity market share as a whole. We don't report specific commodity shares inside of that. Month-to-month variations are very hard to predict, Prashant, because what you see reported is not just a factor of what our volumes are, but what the composition of the commodities is. If one commodity goes up and let's say we have less market share, then suddenly you'll see that share drop. If another one goes up, we have more market share, you see that go up. So I won't read too much into month-to-month variations. The silver and gold going up, is overall sort of, I think volumes have gone up, but market shares will depend on, again, we'll see how that shows up in October. They depend on the composition of the commodities. But what you will also see that more players are entering and expanding this market. So what you might end up seeing that the market shares may change, but overall, I hope the market expands, and that I'm seeing a bit of that already.
Amrish, always a pleasure talking to you as well as the entire team at Angel One. Appreciate you joining in. Looks like you're bracing for better times second half of the year. That's the hope. We'll track you to some of these numbers, but have a good festive season, and regards to the entire team.
You too. Happy Diwali.
All right. Well, before we get into that break, I just want to pull up a stock. HAL stock is moving higher on good volumes. Our Minister Rajnath Singh will be unveiling HAL's third Tejas line in Nashik today. And the new facility will trace, I think, the Tejas annual production from around 16 jets to around 24 jets, reading an article today. So, that's the reason I think we're seeing an additional volume out there. And the other one, I think, is the new listing. Canada HSBC, it's a flattish listing. 106 is the price. I think 106 is what the initial rate as well has come. We'll get that as well up for you on the screen. But a quick note for our viewers then. As you can see, that's coming up on your screen in a short while from now. There is a money control stock score just above the line graph. Now, this is a score assigned to each stock based on money control's multi-factor algorithm. It's calculating by analyzing over 40 parameters, including both the current and the historical financial statements, the price charts and technical indicators for every stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor viewer is advised to carry out the necessary diligence on their own or through a certified registered financial advisor for investment decisions. Well, we'll slip into a short break. On the other side, we'll focus on the pharma sector in our special segment, Quarter Se Quarter Tak. We'll have Sayon Mukherjee of Nomura who will be joining in as well. Stay with us.
Welcome back. Markets, I think, have slipped a little bit, but not by much, about 10 points lower. So the high today has been, actually yesterday's high, 25,625 was the high yesterday. Today is 25,623. So just about there. And then there's a bit of a pullback, which is taken place from that particular level. 1,400 stocks are lower, about 1,300 stocks are higher. So it's basically on an even keel without too much change. Lots of new names, by the way, in the mix, which were not there in the morning. So I'll just name the new stuff, right? Adani Power is now the biggest volume-led gainer as far as the NSE is concerned. You've got Asian Paints, which is up 4% now. So that's a sharp move higher, which we are seeing. And Asian Paints, by the way, 2-3 days back from 2,300, it's moved up to 2,500. So that's a fast-paced move. Share India, I highlighted, with a 9%. It's the third largest volume-led gainer right now. 2 new names into the mix in terms of top volume-led gainers. HBL Engines, 3.5% on it, $950. Very large volumes on HBL. And look at MTAR Tech. I mean, it's a company we've spoken to recently, and they put out that guidance. Oh boy, what a month it's been having. 20% after a 30% month, which was the previous month. So MTAR has done very well. There's other stuff as well. GM Breweries has been doing very well. Force Motors, we were discussing with Hiren Ved earlier. Force Motors is up 4.5% right now. There's a company called Crizag, one of the few listings recently which is way below the issue price. So 8% higher on that one. So lots of stuff moving, and I'll address more in a bit. But it's time for our special segment, Quarter Se Quarter Tak, and today we put the focus and spotlight on what the expectations are from the pharmaceutical space. Ekta is standing by with exactly that. Ekta, over to you.
Thanks for that. Well, overall, let's start with the domestic pharma segment, where growth is expected to be around 10% on a year-on-year basis. Companies are likely to see a 50 to 200 basis points impact from lower primary sales following GST revisions in September of 2025. Chronic focus players like Sun Pharma, Torrent and Zydus should outperform, while acute heavy players like Alchem, Mankind could see softer growth. For US generics, expect overall US sales to remain flattish Q-on-Q due to lower contribution from the anti-cancer medicine Revlimid generic across Dr. Reddy's, Aurobindo, Cipla and Zydus, alongside continued base business price erosion. This should be partly offset by traction in key products such as respiratory drug Spiriva generic and kidney drug Lynarc for lupin. Now, bladder control drug Mybetriq generic, which is basically for Zydus and lupin, and new launches like the cardiac drug Entresto for Alkem Torrent and Dr. Reddy's, and the blood thinner drug Zalretto for Aurobindo and lupin could be in focus. Now, Cipla could see a decline Q&Q in the US due to flattish lanreotide sales and albuterol sales. For Biocon, you're likely to see around a 14% growth in core biosimilar sales. On the operating side, higher R&D and SG&A investments coupled with pricing pressure in the US are likely to keep EBITDA margins largely flat. Stock specific, watch for Sun's traction in specialty products with a focus on Lexelvi launch, color on impact from the announced tariffs on branded pharma, Lupin commentary on competitive landscape for tolpraptan, and Dr. Reddy's launch plan for semaglutide in Canada and Aurobindo could be something that could be watched for. Within APIs and CDMO, watch for high single-digit growth led by Divi's, Loris and SciLife, while Syngene and Piramal Pharma could post muted quarters this time round. Well, back to you guys to take the conversation forward with Sayan Mukherjee.
Okay, all right, Ekta, thank you very much for that. So that is a quick perspective on what the expectations really look like as far as pharma is concerned. Sayan Mukherjee is now with us, Head of India Equity Research at Nomura. Sayan, good morning. Great to have you with us here. Happy festivities, happy Dhanteras and Diwali to you and your team at Nomura and your loved ones as well. Thanks for joining us this morning. I trust you heard Ekta's crisp explanation of course, what the preview set looks like. What stands out to you? What's the broad sort of overlay as you look at these earnings, analyze these numbers in the space, Sayan?
Thanks, Prashant, and happy Diwali to you, your team, and the viewers. Yeah, I mean, this quarter is a bit unique, I would say, in the sense that there's just too much of volatility and disturbances, if I may say so. So the numbers per se may not really convey much. And I think people would sort of look forward to some of the expectations, which Ekta had outlined. I think the key issues that we would be dealing in this quarter is slowdown in India because of the implementation of GST. Many of the large companies tend to book their sales a few days before the end of the quarter. And to that extent, since the GST got implemented towards the end of September, one could expect, meaningful slowdown, I would say, in the month of September, which will sort of get reflected in this quarter. But that should reverse as we go into the next quarter. And the other issue is around generic Revlimid in the US. Most of these large Indian companies, they have contribution from Revlimid, which is now coming to the fag end of the exclusivity period. And therefore, we should brace for some decline. And I think most importantly, what it means, because generally the street believes that Revlimid is a very high margin product. And if that starts to decline, you could see that manifesting into margins, lower margins. So I think that would be the key to watch out for as far as this quarter is concerned. But as I said, it's a transitory quarter, and a lot will depend on what the guidance, or the company talks about the future Q3 and Q4.
All right. Hi, Sayan. Good to have you on the show. This is Nigel on this side. I was just recalling what you said in our earlier chat in January, and it seems, you're pretty much on the money. And I say this because you were saying be very stock selective. On the Nifty, maybe, low single-digit returns is what you're going to be looking forward to. Consumption could get a boost. That has well happened. And the last point I think you made was focus on some of these, quick commerce plays and, some of these platform plays. And they as well have done well. So you've had a good track record this year. But from here on, what do you feel about the markets? You've gone through a bit of a time-wise correction. We have lagged our peers, emerging market peers, the global market party, and most of the asset classes as well. Do you think with the fiscal monetary policy support that we've got, maybe things look up from here on? Earnings as well could pick up.
Yeah, absolutely. I think, late last year, I guess, given the valuation and the growth headwinds, I think that was probably easier call. Now, of course, a year has passed and India has underperformed. I think we should see some improvement definitely in the third quarter, driven by consumption, the GST cut, and there are other factors as well, right? The inflation is low. We have seen, monetary stimulus being unveiled. So we should be, seeing traction in consumption. I think that's something which probably the market has already started to factor in a meaningful way. I think the key would be the sustainability of that strength going beyond the festive season. How much of that strength continues and whether it sort of kickstarts a stronger economic cycle. I think that is still not very certain in the backdrop of several uncertainties, particularly on the global front, that we continue to face. And unfortunately, things haven't really settled down yet, and we still are grappling with significant amount of uncertainties from the global side.
Sayan, well, I'm just going to toss it back to the conversation on pharma, and I'm going to ask you about what your thoughts are with regards to what's taking place in the US now when it comes to this entire tariff situation. The branded pharma drugs seem to probably be more impacted. We've heard positive noises that, the generic pharma is probably unscathed at this point in time. Do you think that Indian pharma is now out of the woods?
So we can't say it's completely out of the woods, but I will be in the camp that it would be difficult for the generic companies to be tariffed, at least at a very high level. And if you see incrementally, the noise that has come from the US does suggest and give us confidence. I think there is statement suggesting that the Section 232 investigation is not thinking about tariff on generic pharmaceuticals. That's one. The Trump administration has talked about strategic reserves and also giving some sort of priority for filings which are done out of the US. I think the broad objective here seems to be there is today an over-dependence on imports as far as pharmaceuticals is concerned. If they can get some bit of an ecosystem established, that's enough. I mean, it's very difficult for generic manufacturing in large scale to move to the US. And actually, Indian companies does add significant value because of cost, quality, and therefore I don't think the US would like to completely create or try to sort of completely change that, particularly in a complex sector like pharma where it takes years to establish supply chain. So I am getting more constructive as far as generic pharma space is concerned from a tariff perspective. As far as brand, as you said, yes, I think that's a little bit more challenging, but most of the Indian companies, except for Sun, who has presence on the branded sides, most don't have. And I think going forward, the fact that the US is talking about lowering drug prices in the US, and probably we will see an increase in prices in Europe. So that also changes the geographic dynamics as far as branded medicines are concerned.
Okay. What is your opinion on, the entire CDMO space? Do you think that's, a space you would be interested in, something that you're recommending to your clients as maybe a longer-term beneficiary of, say, the China Plus One?
See, CDMO theme, I think there is definitely a truth to the narrative. I think people are looking at diversification, whether, you have a Biosecure Act in some form or the other, but I think the companies in general, the innovator companies are looking at alternatives, and India is clearly a beneficiary of that. Now, I think like in many pockets of the market, I think the narrative is very strong, and that's already reflected in the stock prices and very high valuations for many of these stocks. And and therefore, we may not really see immediate returns here. And many of the companies would have to go through an investment phase, whether it is in technology, whether it is in manufacturing setup, so that we can really compete with China effectively. And I think we would see a significant amount of investment in the space. From a long-term perspective, if you're thinking 5 years as a horizon, I think this space does provide a lot of opportunities because there are many small companies which can scale up quite rapidly. But in the very short term, in the near term, given the run-up in the stocks and valuations, one may not, expect a lot of return immediately.
Sayan, thank you very much for that. Ekta, thank you very much for taking us through that conversation as well. Really appreciate your time here, Sayan, and good to get that. Well, the market, I think, is back up, but it's, 20 down, 30 up, that kind of session so far, but it's still very, very early days, the first 40, 50 minutes. Sudeep Shah is with us with a quick view on price action. Sudeep, good morning. And, wishing you a happy Dhanteras and Diwali. What's the call?
Good morning, Prashant, and wishing you and everyone at CNBC TV18 a very, very happy Diwali and all our viewers also. Prashant, what I feel is last 2 days price action is speaking everything as we are entering into this festive season. Markets have also cheered and 25,400, 25,350 in all our previous discussions. That was that zone which we wanted Nifty to cross, and then we would see a big move on the upside, and that is exactly happening. And one important thing of what we are noticing is that although the mid-cap side of the market has not moved yesterday, but the large-cap stocks have reacted well. And now we feel that 25,400, 25,450 now will become a base for the markets in the coming few days. Until this is held on the upside, 25,800, 25,900 levels can be witnessed in the next week. From the Bank Nifty perspective, 57,100, 57,150 now becomes an important support on the downside. And with the kind of momentum and strength that the banking stocks are showing, I feel 58,000, 58,300 can be witnessed in the next couple of days. And we all know that it's a result-heavy weekend. So I guess that is the reason I feel that banking stocks are going strong into the results.
Got that. In terms of specific ideas, Sudeep, what do you have?
A couple of them. One is from the defense space. Today we have seen the defense stocks breaking out on the upside, HAL, BEL. So we like BEL more amongst all the other stocks, and 415, 416 is where BEL is trading at. It is at its breakout point. On the downside, 404 now becomes an important support. So till 404 is held, we feel an upside up to 440 is on the cards on BEL. The second stock that we like is from the large cap space. That is Bharti Airtel. This stock also has given a breakout on the weekly charts and can be bought with 1930 as a stop loss on the downside with 2100 targets on the upside.
Got that. Sudeep, thank you very much. Good speaking with you. Enjoy your weekend and festivities. Thanks very much for joining us. We come back in just a bit from now. And we put the focus back on the commodity space, which I think is really on a tear, especially precious metals, gold, silver ETFs once again making a big move this morning. Manisha coming up with that in just a bit. Okay, welcome back. Commodities in focus, and Manisha is with us in festive attire. Manisha, good morning. Gold and silver, unstoppable run.
Oh, well, yes, I wish I could talk about something else, but it is gold and silver which continue to make headlines. So take a look at the gold prices. Every single day when you wake up and the Asian markets are nearly $30 to $50 to $60 on the higher side. As you can see, we still are trading $40 on the higher side. 43.80 is an all-time high that we have seen happen in case of gold prices. It has been one very, very strong run. We started this year with 26.50. We are trading at 43.80 right now. So yes, it has been a 62% of a jump up. that we've seen happen in case of gold prices there. And with that, it's a 64% of gain as well. Various new factors that have come into the market which are supporting is the U.S. credit market concerns. Well, remember, last 24 hours, this is what has been on the street's mind. And this has led to a decline in the global equities as well overnight, whether it has been about Europe, U.S. markets closed lower as well. And that in turn also seems to be supporting gold prices. And then you have U.S. and China trade concern. The rhetoric from both countries does not stop. And that does well for the bulls who are into the gold markets right now. It also is about the prolonged U.S. Government shutdown. Until that continues, why would you short gold? And that's exactly what the markets are doing. The U.S. Fed rate cut expectations when that meeting happens on 28-29 October is almost factored into the prices right now. You know, with the kind of run-up that we have seen in case of gold, if you look at the overall global market cap of gold, that now stands at a tall $30 trillion. We've seen a very strong run-up come in for this one. But the one question that everybody is asking and talking about is, on where is gold headed from here? And that's exactly what we have for you in the next plate here. So you have Societe Generale Bank of America talking about $5,000 an ounce in the next year. That's exactly what the latest report from JP Morgan also says. Goldman Sachs as of now says $4,900. But remember, we are still talking about 2026, and these targets can perhaps change. For this year, by the end of 2025, the targets were for around 3,500. We are trading at 43.5 right now. So 5,000 by end of 2026 is what we are looking at. So clearly, even with this run up, the banks and brokerages believe that it is going to be higher highs from here on as well. Take a look at some other banks as well. Blue Line Futures talks about 5,000. Stancy is talking about 4,500 as an average. So clearly, they expect higher prices there. And then ANZ is talking about 4,600 by June 2026. The second half of next year perhaps could be slightly different depending on how things change when it comes to tariffs, geopolitics, US dollar index. So there's plenty to watch out for. And I have saved JP Morgan for the end because he's talking about, Jamie Dimon clearly has talked about 5,000, 10,000, take a pick kind of a conversation. So clearly we are looking at very, very bullish gold prices there. And then you have silver trading at a record highs on your screen. It has been 0.5% of a gain as we started Asian markets today for this one as well. For silver, everything that is about gold is working for silver. And in addition to that, you have seen, one, prices rise by 85%. So it's outperformed gold on a very, very strong basis there. And then you're looking at a global supply crunch that's fueling a historical rally here. There is a silver squeeze happening in the international markets. The US and China trade concerns, almost everything is supporting silver. And at this point in time, it is 50% of silver usage that you're seeing in industrial markets. So that is something that you don't have a proxy for. And with the deficit, very, very supportive. So while we are trading at $54 an ounce right now, Bank of America, ETO markets are talking about $65 an ounce by next year. SD Bullion talks about 75. Motilal Oswal came out with a report yesterday. They're looking at 55 on an average in next year. And for the Indian markets, Motilal Oswal says that you could be looking at prices of 2,40,000 rupees by next Diwali. So that's the kind of bullish cue still continuing when it comes to gold and silver.
Well, dazzling moves there, Manisha. Thank you very much for that. And that's a topic we continue to sort of focus on for the rest of the day and as we go into Dhanteras tomorrow. Thank you very much, Manisha. We'll take a quick commercial break here. Lata will connect with Ajay Kumar Srivastava, Managing Director and CEO of Indian Overseas Bank, to talk about their second quarter numbers. That's a conversation which follows in just a bit from now. Stay tuned.
Welcome back to Earnings Central. Indian Overseas Bank, or IOB, is one of the first PSU banks to announce its second quarter numbers, and it has set a standard that should be very difficult to beat. An absolute standout set. Contrary to expectation, margins have risen by 17 basis points over the last quarter to 3.21%. Credit cost, or the money you set aside for bad loans, has actually fallen sharply by 31 basis points, and now credit cost is just 1.06%. Profits are up 58% year-on-year. Advances are up 21% year-on-year. Only deposit growth is a tiny disappointment at 9%. To take us through whether these three themes, loan growth, margins, and low NPAs are sustainable in the coming quarters, I have with me the Managing Director and CEO, Ajay Kumar Srivastava. Mr. Srivastava, thank you very much indeed for joining us. Festive greetings to you for Diwali and congratulations on a good set. Let me start with the margins. Most banks are going to continue to suffer a curb in margins because of the repo rate cuts. How come it hasn't affected you, or how come your margins have already bottomed out?
Yeah, in fact, reduction in repo rate was anticipated, and almost 9 months before, we started proactively to address the concern.
Okay.
It's not the numbers which we have shown and the increase in margin NIM.
Okay.
It's not overnight, over 9 months of meticulous planning.
Okay.
And successful implementation of the strategy has resulted in that. And this 3.21 also, that is global. If we take domestic, it's 3.35.
Oh.
Quarter on quarter and year on year, we have been able to protect margin. June was, of course, we have not been able to do.
Okay.
But increase in interest income, increase in quality credit, and the more importantly, the focus on good pricing.
Okay.
We have been very selective and lending to those entities only where pricing is good and quality is good.
That's very good to hear. There will be possibly one more rate cut in December or February. That is the expectation, because inflation is surprising on the downside. The governor himself said in the press conference that there is space to support growth. If that is a cut, what is your guidance on margins? Will you continue to rise or keep your domestic margin stable at 3.35 at least?
Yeah, we are pretty sure that it will be around that, 3.35, between 3.32 to 3.35. Plans are already in place. About 9 months before, our total credit portfolio, 60% of that portfolio was repo linked, external benchmark linked. And over 9 months, we have very consistently shifted to MCLR-based lending. And it's not as if that
now what is the percentage? Now what is the percentage of repo and MCLR?
9 months before it was around 60%. Now it is around 46%.
Okay.
Last 9 months, whatever we have lent, that mostly we have lent on MCLR based.
Okay.
And it's not as if the impact of repo cut will not affect MCLR, but as we all know that it happens with a lag.
Yes.
And accordingly, deposit rates also in between get repriced.
Oh.
So the margin we have been able to protect, and going forward also, if any rate cut happens, we are pretty sure that we will be able to maintain at that level.
Okay. What about deposit growth? I mean, that is the only fault I can find in an otherwise perfect set of numbers. Your advances are growing at 21%. Your margins have grown your deposits have grown at 9.1%. So the credit deposit ratio has gone up a bit towards 80. You think you will be able to, up your deposit growth? What is the target?
Yes, see, the growth in deposit has to be seen in one particular factor, that the composition of deposit at IOB, it's not bulk deposit based.
Okay.
If you look at the numbers out of the total bulk share in total deposit is only 5%, 17,000 crores.
Okay.
Out of a total base of 3,30,000 crores. Okay. Meaning thereby that 95% is CASA and retail term deposit, which is very stable.
Okay.
If we want to increase deposit, of course, any day we can go for aggressively for bulk deposit. And that deposit growth also can be shown at 13-14%. But very consciously, we are not focusing on that. The focus is on retail and CASA, and that organic growth. And without any additional focus on bulk, we have been able to grow at 9%. Okay. CASA is also growing year on year. If you see, CASA has also grown. Okay. And then we are pretty satisfied with that.
Okay. Your retail advances, there is a lot to agriculture and, of course, other retail. Would you worry about any likelihood of slippages? What is your unsecured loan percentage as well? We don't have that number.
We don't do unsecured lending as much. It will be less than 1% only if we look at the total portfolio size. And last 2 years, if you see every quarter result, the slippage ratio has been around 0.11, 0.12 like that. We have been one of the best performers as far as slippage control is concerned and slippage ratio is concerned. This quarter also it stands at 0.11 only. Okay. And we do not see any stress whether in agriculture book or MSME book as a product as a whole. Individual cases may be there, but systemically we do not see any stress.
Okay. You indicated that you all are moving to the new tax regime by the third or the fourth quarter. Can you tell us what that will mean to your ROE or earnings? What will be the impact on the P&L and balance sheet?
Yeah, P&L, once we shift there, in fact, we have delayed the shifting to new tax regime only because we wanted to protect P&L. We never wanted that it's going to adversely affect that. So we delayed it. Now we are in a position where in Q3 or Q4, even if we shift to a new tax regime, there will not be any impact on P&L and we will be able to smoothly shift to new tax regime. That is why it has been delayed by almost 1 year. But Q3, I think most probably will be able to do that.
Will there be some positive impact on ROA or something? I mean, as it is, you've done very well in your ROA from 82 last year, 82 basis points. You've gone up to 1.2. That's a very big jump in ROA. Will that be protected?
Yeah, it will be protected, and it will further improve also.
Okay. Again, I'm trying to find some faults in your results, which are otherwise very good. EPS growth, that's the one that disappoints. I mean, if you look at your price, given the earnings, which is less than a rupee, your EPS, your PE ratio looks very high at about 60 times. What is the EPS forecast you can give? I mean, your profit is doing well. That's why I'm asking.
Yeah, it's very difficult to comment on that. What I can say to this is that our job is to give good numbers, generate good profit, generate good numbers, a good balance sheet we are supposed to give, which we have been doing consistently over the last 2.5 years.
Did you hear anything? Yeah, sorry. Go ahead, please.
And beyond that, we do not have any control on other factors. That is what I wanted to say.
Okay. No, I'm just saying if there is any EPS forecast or guidance that you have in mind.
No, we have not thought of that.
Okay, Mr. Srivastava, did you hear anything about consolidation? I mean, when you are doing so well, the only other bank, PSU Bank, which came with numbers is Bank of Maharashtra. Again, it was a very good set of numbers. So, any consolidation talk from the ministry?
Officially, we have not heard anything from any of the authorities. We are reading in newspapers only.
Okay.
But officially, there is no communication.
Okay. What's your sense about what will be your growth engine in the second half? Will it be retail? Which part of retail? Will agri continue? It's a little worrying. Agri sometimes throws up bad loans, especially in the first quarter. So what is your engine of growth and where are your worries?
If you look at my total credit portfolio, retail, agri, MSME and corporate, all are equally distributed, around 20 to 25%. So there is no special focus on any particular area, I will say, depending on the pricing and the borrower type and financials of the borrowing company. We are taking a call. We have grown in retail also, MSME also, agri also, and corporate. We have been, I will say that growth is almost flat in corporate. And mainly because of pricing issues, because corporates are having other sources also of getting funds. And because of pricing, we are not very aggressive on corporates. But
yeah,
retail,
I can see your corporate loans are falling. It's down 3% year on year. Just a final question. Any MFI loans?
Around 1,400 crores of exposure we are having. And out of that, NPA percentage is 2% only.
Okay.
And otherwise, the remaining portfolio of MFI, right now, it's working fine. Okay. And all are regular and standard.
All right. We'll have to leave it at that. Mr. Srivastava, once again, many congratulations for a great set of numbers and a very happy Diwali to everyone in your team.
Thank you. Thanks a lot. Happy Diwali to you also. Thank you.
Thank you. We have to wrap up on that note. And from all of us, the entire Bazaar team, a very happy Diwali to all of you viewers. Take a break. Char Pastors coming up.